Hi everyone and welcome to today's morning report on Monday the 11th of January with me, Richard Perry, market analyst at Hadtech Markets. The European trading session's got off to a fairly solid start actually, and that's sort of come with no real translation of some weakness that we had in Asia overnight. The markets seem to have been able to settle down a little bit. The Europeans have taken a little bit of respite really. No real driver behind it. The Chinese inflation over the weekend was disappointing again. Inflation on the CPI basis dropped, but increased to 1.6, but that was less than the expected 1.7%, and also the the PPI was at a 46th consecutive negative level as well. So continues to remain disappointing on the Chinese data, and that sort of hit in, market sentiment in Asian trading. But what we have seen is just as the European traders have come in, just a little bit of support, a little bit of a turnaround in sentiment. You've seen Treasury yields starting to pull higher again. You can see that as a key level, isn't it, at 1.12 on the 10-year Treasury, the big support there. Just bouncing up from that again, the 2-year slightly higher as well. And you're seeing the dollar getting a little bit of support. Friday was, Thursday and Friday have been really choppy days on the markets in terms of currencies. And we're seeing a bit of a turnaround. We've seen the euro slightly lower again. That was sort of reversing some of the gains that we saw on Friday, and also the dollar yen starting to pick up again. So I'll talk about those when I look at my charts in detail in a bit. But certainly that is suggesting that a slight improvement in risk appetite, generally speaking, is what we're seeing today. That's certainly needed with equity markets being under so much pressure. Look at the VIX is up at levels that we saw back in September. Now, so a very strong increase in volatility or concern, which generally tends to drive portfolio fund managers into index short positions through their puts, and that seems to be what we're seeing at the moment. So what have we got to look forward to today? Well, not much really in terms of economic releases. There's nothing really on the economic calendar to impact on sentiment, so we could be a relatively settled day in terms of trading. Certainly the Europeans are reasonably settled. It could last until the US comes in sort of around 1 o'clock this afternoon, and it seems to be that there's a fairly settled sentiment at the moment. Now that takes me to my chart of the day. Sorry, I've got the wrong levels on here. Takes me to my chart of the day, which is the DAX. And what we have seen in the DAX is an improvement in the DAX trading today, but not a huge amount, and we're still trading around that 61.8% fib level. Slight increase, about 0.9% up on the DAX, about 80 odd pips, or ticks, sorry. And it's just held on to that key low from Thursday, 98.10, 98.13 was the opening low. Just bounced up off that, but be very interesting to see how we trade around these fib levels, because they do tend to be key, or certainly on the upside anyway. It'd be interesting to see if it comes in and forms support around here on the downside as well. Your key overhead resistance is 10,122. Now I'll show you the significance of that level, because the DAX found that resistance bang on Friday before coming off again. That was the key reaction low in mid-December. That's been the basis of resistance again on Friday. So that needs to be broken to the upside before you start to get any sort of interest in thinking that you're going to get a recovery in this DAX. But there is still quite a lot of overhead supply in place on the DAX, even though we've had this rally. Or this rally has begun. You've still got quite a lot of overhead supply in the 10,223 area, and then 10,350, and also 400 as well. So quite a lot to get through if this rally is going to be deemed to be something that you would back. You'd still say the momentum indicators on the hourly chart are just unwinding the oversold position, and just unwinding the downside to renew the downside potential, and that's what the MACD lines are suggesting, and also the RSI as well. Stochastics again also sort of rolling over on Friday around that point that it has done through January. So that would suggest again rallies are a chance to sell. So we need to be mindful of this rally and as to whether it will be sold into once more. But it looks at the moment as just though it's just unwinding a little bit of that momentum that we saw on Friday, but I would be looking at probably using it as a chance to sell, because to be honest, breaking through that 61.8% fib level and closing below it again on Friday, just for my money, I think we're probably going to be coming back towards a test of these August and September lows again at some stage, just once this little move has unwound. But with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.